All right. Hello, everyone. Welcome to the panel event, Ask the Experts with the Bank On Bloomington Coalition. I am Amy Lionbeck with United Way of Monroe County. I'm the Community Impact Director, and I have with me many of our Bank On Bloomington partners. So I'm going to let them introduce themselves. So take it away.
Stone with PNC Bank.
Can you start again? I didn't hear the first part of your.
Sure. Yeah, I'm Kate Livingstone with PNC Bank, and I'm the community consultant.
Okay, I'm with Katie. I'm Katie Thompson. I'm with Apprizin, and I am a financial services specialist.
I am Davina Lonnie, and I am a mortgage loan officer for Regions Bank.
And I'm Angie Kidwell, and I'm also with Regions Bank. I'm the branch manager at the Whitehall office in Bloomington.
And my name is Kevin Osborne. I am the business development officer with IU Credit.
Excellent. Thank you all so much for joining us, and thank you at home for watching and coming here to learn some more about financial topics that are on your mind. So we had several questions that were submitted for this panel event. So we're going to start with the mortgage and home ownership topics. So the questions are, what goes into refinancing my mortgage, and what should I know about the interest rate versus principal, all of that. So if anyone wants to jump in and give an overview of those questions and answers, go ahead.
Sorry, and you guys can add on to that. You know, when I think about a refinance, it doesn't necessarily mean the best interest rate. It depends on what the client's looking for. It's their goal. So if someone's trying to lower their payment, shorten their term, that sort of stuff, those are kind of the things the questions that we would ask. I would say in this market, if you don't need to refinance because you don't need any cash out, I don't know that it's the best time if you're trying to reduce your rate. We can still reduce payments because we can, make the term a little bit longer. Or shorten it if you want to pay your house off faster. I don't know if anyone wants to add anything to that.
Maybe I can ask a follow-up question about what is the most important thing to look for in an interest rate? Would you recommend or the terms, the length of time? What do you sit down and start with people to find out?
The first thing I always ask are, what is their goal? If someone's going to refinance, there has to be a reason for it. So do they need cash out because they need extra cash to fix up their house? Do they need just money because for medical bills, that sort of thing? So we really just try to start there. It always has to be a conversation. What I try to have all my clients do, if they don't bank at Regions, I always encourage them to get a banker wherever they bank, because everyone should have that. That's really how you start to educate yourself. I spend a lot of time educating my clients. Some of them don't do mortgages because they're not quite ready. So we do a lot of the educational piece first. But as far as refinances, typically when they come to me, if they're refinancing, they understand a little bit better because they've had mortgages. And so again, I just start with the goal in mind. Is it to lower your term? Because some people just want to get their house paid off sooner. They've gotten a better job so they can, afford a higher payment so they can, take 5 years off of their mortgage. And sometimes it's just, I educate them, they can always just pay extra towards the mortgage and save the closing costs. They don't have to refinance necessarily to get their term lower or to pay off their house sooner.
And I can probably piggyback on that, and I'm sure some of the other partners as well, is at the branch level, we can also do, if you own your own home, we can take a look at it from a home equity aspect. Especially, you might want to leave your mortgage where it's at the current rate that it's at, and maybe just get with an equity so that you can get the additional funds that you might need for debt consolidation or remodeling or whatever your needs are for the funds.
Great. Anybody else have anything to jump on in terms of refinancing? I guess I'll jump to the next question, which is related, which I probably should have started with, in working towards the first home ownership. So when you're not a homeowner and you want to get a mortgage, what is the most important thing to have a conversation about with your bank? So where do you start?
I really start with what kind of payment they're most comfortable with. Because I think people say, oh, I want to get a $250,000 house, but they're not really thinking about what that payment's going to look like. And so I try to start there and kind of back into how much they can afford, because sometimes they forget about taxes and insurance that start to make your payment go up. You know, we have a couple programs at Regions that are, in my opinion, second to none, because they are 100% financing, or 97% loan to value and 100% loan to value with no mortgage insurance, because it's a region specific loan. So we fund it, we service it. So it's a great program that you just don't hear of, because if you don't put a down payment, you have mortgage insurance, but not with our programs at Regions. And so I really try to help my first time home buyers get into that program. So, you know, there's a credit score that they have to, you know, qualify for. If you get the 100 program, it's like a 680, but that's why we have the 97, because they only have to have a 620. And so that typically will encompass all of our first time home buyers that we come in contact with. And so they're just great programs, because we are about helping our communities, educating our communities at Regions. And so I typically will start there with the first time home buyers and just educate them about all the different terminology that they're going to hear. And I always encourage them to check rates. If the rate is the most important thing, you know, I encourage them to check around. You know, not everybody's going to have the same rate. They're similar, but if it's really the most important thing, you should shop around and see what you can find. But for me, it always comes down to the customer service piece of it. You know, I think that, you know, as long as you're taking care of the client and educating them, I think that 0.25% shouldn't matter, right? It's not that big of a deal at the end of the day. If you are getting that personal service and you're in the best possible program to meet your needs. Because honestly, mortgage insurance is going to be way more than 0.25% if you have to pay that.
I agree wholeheartedly with what Davita had to say. And that's one of the toughest things about a first-time home buyer. I would say, first of all, and as you mentioned, alluded to, start with getting a good credit score. So doing those things leading up to that step to make sure you have a good credit score to pre-qualify, because that's got to be critical. Because you, as you mentioned, if you drop below, there's a chance that a mortgage is not even a possibility at a specific FICO score or credit score. So that's one thing to keep in mind. And like you said, a first-time home buyer, a young person will say, starting out, how on earth are they going to have 20% down to put down on a mortgage? So these programs that the banks and credit unions have that are less than a 20% down, less than, or not necessarily a traditional mortgage, but give you that opportunity without a huge lump sum down payment, are critical. And then of course, government loans come into play there too, whether you have to be a veteran for a VA loan, which can be helpful, FHA loans and things like that. But yeah, don't get discouraged thinking that you have to have 20% down right out of the gate, because that can be a heartbreaker immediately. And a lot of the institutions have online tools where you can kind of get a good look at what you're looking at from a price and kind of see where you are from a payment and closing cost standpoint. Because oftentimes too, a good low rate, that institution might have higher closing costs than others, and it all comes together. It's all part of the package. So as you mentioned, shop around and take a look and start with those relationships and make those conversations, because you'll be better off in the long run.
And I do refer my clients a lot of times back to the bank, whether it's Regions, wherever they bank, to help, like Kevin said, you know, the tools that they have, they can help educate them on all the different aspects of just really financial wellness, honestly, because there's so much that goes into just buying a house. There's a lot more to it than just actually being able to afford the home, but then how to take care of it. We actually, that program I spoke to you about, there's actually a class you have to take. It's called Home Buyer Counseling. Because we want to make sure that they understand a lot of the different things that go into owning a home. Because I think sometimes we forget, well, we don't think that if we've owned a home before, that new homeowners don't understand all the things that are going to come into play when you do own your own home.
I do. When I do, I'm a HUD certified housing counselor, so I do housing counseling. And so I actually do a lot of pre-purchase. And one of the things I tell folks that they kind of have to think about is that home maintenance afterwards, because it's really not a question of if, it's a question of when. Like that you're going to need to replace the roof, you're going to need to replace the furnace, hot water heater at some point. So just how crucial it is to have a plan for savings. So you don't necessarily have to go into the home equity. You don't have to dip into other kinds of credit. So yeah, just having that really solid, robust plan for savings as you move into home ownership is something we really strongly recommend as well.
And if you aren't in the place right now where you're thinking about purchasing a home within the next year, it's always great to have those conversations with the banker that you trust ahead of time, just because at some point down the road, it could be the right situation for you, right? So maybe your rent keeps going up and you think, I could save a lot of money if I did purchase my own house, but then you have to start making some of those changes to your budget. So I think it's important at any point to say, this could be a future me situation, and what would I need to do to get myself prepared for that? So like Kevin said, it could be working on building that credit score, or it could be making sure that you understand how you spend your money or how much savings that you have put away for emergencies, because I think those things really fall into place when you do get to that point in life.
Great points. Thank you all for all of your insights. I think we should move on to the next question, and we're going to lose Davina soon, so she has another appointment, but thank you so much for joining us, Davina. It was really nice to have you here, and we look forward to maybe seeing you in the future on more Bank On Bloomington events.
I really appreciate it. Thank you. I'll definitely work with you again.
Take care.
Your day.
Thanks, Davina.
Bye-bye.
All right, so the next question is, what are the credit implications of having multiple bank accounts, checking, savings, anything else? Are there any credit implications to multiple bank accounts?
There are no credit implications for having multiple accounts. You can have as many as you can manage. I would say the biggest thing would probably be making sure that you don't lose track of them, that they stay above a zero, balance, and that you're not getting service fees on those accounts, because then it's costing you money. So you can have as many accounts as you can manage, no impact on your credit at all from that aspect of it.
Say something else that people don't always think about too is the relationship that you have with your bank when it does come time for lending needs. So while having multiple accounts and spreading them out over the course of maybe different financial institutions may not impact your credit, sometimes having things in one place helps tell your financial story a little bit better. So for instance, people say, maybe I want to hide my savings at different financial institutions, so I'm not as tempted to touch that. One of the things that it can do is it could show the lender that maybe you come to PNC and you're trying to get a loan. If I can't see those other accounts, then it's a little bit harder to understand where you sit financially. And sometimes a lot of banks are going to offer some sort of internal scoring system as well. So outside of those typical credit scoring, credit bureau numbers that we see, we have internal numbers based on your relationship and the risk level that we're willing to take based on how you've done business with us in the past. So it's important to understand maybe some of those things that you may have coming up, so you can have those conversations with the banker and see if having things in one spot might help strengthen your relationship for some of those lending needs.
A lot of us use check systems or something like check systems in opening accounts. And the only thing that I've really come across that might be taken as a negative is the fact that there can be suspicion of check kiting if you've got a bunch of accounts, especially if you're writing to yourself, and that can show up as a question mark or at least what's going on there. But as far as being penalized, if it were credit cards we were talking about instead of just checking accounts, it would be an entirely different story. But yeah, there's no penalty if, as Angela said and Kate mentioned too, keeping track of all that would be the tough part. And if you don't meet the minimum balance requirements and you start getting fees that you weren't expecting by having all those separate bank accounts at different institutions.
And I want to add to what Kate said as well, that it's important sometimes that you know your banker. And we've said that a couple of times, not only for lending needs, but also let's say you're out of town and you're having trouble with your card or something else. If you know who to call, or if you have trouble, it's easier than if you don't know the banker. So getting to know your bank and your branch staff is a good thing as well, because it helps you in the long run. And then they're on your side too, to help you through any financial questions or issues you might have in the future.
Now, how do I do that? If I've never had a bank account and I go in, how do I start a relationship with a bank? What does that mean?
At my bank, we have a, not only sitting down and meeting you, but we actually have, and I'm sure my partners here probably have something similar, where we actually will ask you a series of questions to make sure we're getting to know you so that we know what all your financial goals are. So that can be updated through time. And we usually suggest to people, it's usually good to sit down with your banker, just like your insurance agent, or your doctor a couple times a year. Some people, especially younger people, don't, everything's done online. But again, it's good to have a face. So just going in, when you need something, introduce yourself. I mean, most of us, I think, have regular customers. We know their names, they know our names. But it's good to just go in and introduce yourself and stop in the bank when you have, a need to make a deposit or something.
Is there
Yeah,
a cost to that? Does that cost
Nope.
anything?
Nope.
Sorry, Kevin, go ahead. You were going
No,
to say something.
you're right on. I think most of us are required to have like a know your member type questionnaire or know your customer type questionnaire, to where we start to build that relationship. And even if it is an online relationship where they start the account, we have a moment with our service people at the desk when someone comes in and really start to begin to know who you are and the best way to service you, whether it be the services and products that you need or what you need from us, what you come looking for. We can offer the best solutions possible.
I would just add to that. If you do go and have that conversation and maybe you feel like things just aren't clicking, everybody has different personalities, and it is important to find somebody that you do click with, because those are going to be the people that you're going to be more comfortable when you get into a situation financially, or you have questions that maybe you're not as confident about asking. And we want to make sure that we do have that relationship with you. So it's okay. I would say, just like okay to shop around for your banks, it's okay to shop around for your banker too, because we do want to make sure that there is that trust and that bridge built between us.
Great. It's kind of like the financial coaches at Uprising. You have to start that relationship and build on it when you're working with somebody on their goals.
And it's super helpful, as some of the other panelists mentioned, to have that pre-existing relationship. So it's not the very first time that you're talking to them, you're 3 months behind on your mortgage or something, to have that existing relationship is just really positive, can be really helpful. So just keeping those lines of communication open is something we definitely recommend.
That's great. All right. So we had a question about business funding and banking. So I'm guessing this is someone who is interested in starting a business, maybe a small business. Maybe we can also talk about self-employment, because a lot of people dabble in that. So it's not a real specific question, just kind of in that area. What should we start thinking about when you're thinking about starting a business, getting funding, getting a bank account? How does all that work?
I would say probably when customers come into me and they're wanting to start a business, it's very hard to especially get lending when you're first starting a business, because if you've not been in business for 2 years, typically the banks are not going to be able to get you loans. So I would usually recommend to someone to the SBA, working with them on their getting a business plan together. So that,
What is
and I know
SBA?
SBA,
What is the
Small Business Administration.
Okay.
They offer courses where you can get partnered with someone. So it's a good way to get a business plan put together. Ivy Tech and other places also offer such courses, but you need to, establish your business. Usually an accountant or an attorney is a good starting point to make sure you're setting it up all correctly and getting yourself set up for your taxes properly. But then whatever your business is, every business is different. So again, going back to what the panelist was saying, go in, sit down, speak with your bank. Possibly you might need to go to, several banks. You can even talk to maybe friends or other people that are in similar industries to see how maybe they started, because usually they can be helpful. A lot of my customers, In the past, they usually have to use the equity in their home to fund the starting of a business, or family members or investment partners, if you can find people to help you to get off the ground, because it's hard to get that startup money when you're starting a business. And generally you have to still be working. You have to have a source of income to pay for those loans. So most banks are going to want to see a source of income. So some people want to quit their job right away to start their business, and you might have to ease into it so that it's not losing all your income up front.
Yeah, I would agree with what Angie said. I think that having that conversation with your bank, especially as you're starting to think about your capital that you might need for your business to really get it going, depending on where you bank, may have different partners. So for instance, we work with several community development financial institutions that specialize in funding businesses. So Bankable, Business Ownership Initiative here in Central Indiana, and they have actual funds where they will help you with the technical assistance and wraparound services to really start thinking through those business plans and kind of get maybe some of those side hustles off the ground where that might become your full-time development. And they're really great too, because they want to make sure that they are making you look good when it is time to come to the bank for funding, right? So they're trying to make you bankable, which is where they come up with that. So they will help you really stand that up. And then they also do have funding for if you're under that 2 or 3 year mark where your bank is looking to, take away some of that risk of a new business to start lending to. So there are plenty of resources, especially after COVID, where we've seen a lot of people realize that they had a lot of skills that were valuable and wanted to kind of take some of that into their own hands and make their own money. So we are seeing a lot of those resources grow. And there's some really cool initiatives too, such as Kiva hubs, where some of those financial institutions are connecting with some online donors and crowdsourcing some of those initial capital streams to get businesses off the ground. So it's really, really innovative the way that things have changed over the last few years for new business owners, and definitely have that conversation with your banker to identify what would work for you.
Kate, what was that you said? Kiva hubs? Can you spell that?
Kiva, Kiva. And so what they do is they kind of work with you to get an idea of what your business would be, and they create kind of like an online profile within their hub, and you go to family and friends and kind of crowdsource part of it, and then they have these private donors that are working with the funding that will see it and say, hey, I can see that their family put in X amount of dollars over a specific period of time, and I'd like to come alongside and match that. I think it's a great business plan. So it's really something cool that we've seen kind of start popping up over the last few years.
Kind of like Shark Tank.
Yeah. Local Shark Tank. Yeah. So
except you don't have to go on TV to pitch it to the sharks who are going to tear you apart.
Yeah. So I know if you visit the LISC website, LISC, they had some Kiva initiatives that they were working on.
What is LISC? You're saying all these things I don't know.
I know. I'm trying to keep up with it. So LISC is one of our community partners. They do a lot within our community here in Central Indiana, and they're actually a nationwide group. But what we see them doing a lot of here in Central Indiana is they work with some of those business initiatives to help with the technical support and try to find funding. And then they also work with like affordable housing initiatives. So they're really a community partner and try to help bring people into their best financial set.
Does it stand for something, or is it?
Ooh, I can look.
Okay. Thank you for mentioning all of these great things. I'm learning so much.
Yes, it's Local Initiatives Support Court.
Great. Local Initiatives Support Court. I like it.
Yeah, like corporation. Yes.
Oh, corp, not court. Okay. Thank you.
Yeah.
Those are all great. And entrepreneurship, makes small communities or makes communities happen. Small business is the backbone of a lot of our communities. So although it does sound daunting and there is work to be done, it's worth the effort, especially if it's something you have a passion for. And like you said, especially during the pandemic, that some things have come to light that maybe people didn't even think about as a possible income source or career opportunity. So yeah. The thing about lending, there's risk involved in anything. We heard risk come up. And so the best you can do to make yourself less risky to a business lender, or if you're getting a personal loan, the better off your chances are of becoming successful in getting that loan.
So what are some major things that you can do to show that you're not risky or you're less risky?
Your personal finances, going back to credit score, are one of the first things you want to do. You want to make sure that you don't have outstanding debt or you're in collections on things of that nature. That's the first thing, is to keep your house in order and run your personal life as a good business and a good business risk. So that would be step number one.
And probably just piggyback off of that, not only keeping your credit and your house in order, but part of that is, having the savings, having the backup funds that you need for yourself shows that you are maintaining your finances well as well.
Mhm. Great. Any final thoughts that you guys have? That was all of our questions submitted. So, but any other things that you've thought of since we've started here? You guys had such great ideas and insights. I'm so thankful for your time here.
I've learned a lot. Thank you. Thanks to each of you.
One thing
Amy,
that I will add, oh, go ahead, Kevin, I'm sorry.
I was going to ask Amy, with your alliances and things through what you're doing, are there opportunities to get funding for small business or counseling? I know that through Apprising, the counseling is available. What are some of the things that you have available for folks?
Sure. So there's a couple of financial stability programs that we promote and support in the community. The Bank On Bloomington Coalition is one of those things. So you guys are all a part of that in helping folks establish a good relationship with a bank. So if you haven't had the best history with banks, or you don't have a history at all of our Bank On Bloomington partners are willing to say, hey, we'll take a chance and work with you and get you into a good relationship with a bank so that you can have a checking and savings account and start to work on good credit and start to repair that or create that positive history. So we are really thankful to have those partners, and we try to keep you all keep people informed about where to start with those partners are ready to take your hand and lead you down the road of good banking relationships. We also offer the free community tax service. That is a volunteer-led tax service where you can get your taxes prepared for free by an IRS certified volunteer. And really, that is a huge income boost for people. People get thousands of dollars back, and they don't have to pay any part of that to a preparer. It's really surprising how much people will charge for a simple tax return. So you're giving away several $100s of your refund and credits that you are owed back. So we try to make sure we can give that to as many people as possible in our community to get their taxes done for free and get those refunds and credits back. And then we do a partner with Apprising to provide financial coaching for individuals in our community. So I'll let Katie talk about that since you're here and you're one of our coaches.
Sure. Yeah. I do the financial coaching. So usually with United Way, it's about a year, 6 months. So we do get to work with folks for a longer period of time. And I've done financial coaching for United Way clients as well. So with the financial coaching, yeah, we really try to, and we do meet people where they're at. So kind of as Davida was saying, talking about what are your goals, what do you want to accomplish? Because everyone has different goals. For some people, it's just to make it balance at the end of the month. They just don't want to be short at the end of the month. That's their goal. And that's great. That's awesome. Other people, maybe they want to hit a savings goal, or they want to pay down debt, or they have lots of different goals. So it's really about, just